Hey everyone, and welcome to Earnings Cheat Sheet for Friday, August 15th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, we're already halfway through August here. We still have earnings rolling in. So, what's on your radar for this week?
Yeah, starting to see some more retail type names, consumer names. Going to take a look at Walmart, Viking, and Amer Sports.
All right, well, let's start with Walmart, which is scheduled to release Q2 earnings on Thursday, August 21st. Earnings for the retailer are projected to rise 9% to 73 cents per share, and revenue is seen climbing 4% to $175.86 billion. And here's why we're watching Walmart. It's the country's largest private employer, and we'll be interested to hear comments on tariffs as well as comments on back to school and holiday shopping periods. And Ed, Wall Street generally seems bullish on Walmart. It seems like they've handled the tariff situation really well, and they're also making gains with that middle to high income consumer. But we see some competition growing with Amazon expanding their grocery delivery service to over 2,300 cities. So, what are your thoughts with Walmart here? There's a lot going on.
There is a lot going on. It isn't growing tremendously, but it had been going pretty solidly. Last quarter was a bit of a slowdown. Yeah, it's they had said a few months ago that we're probably going to raise prices, and presumably they did. They get a lot of attention because when Walmart raised prices, they can't do it quietly in the sense as that gets known. And so that raises political issues. But yeah, so how much are they passing on? How much more will they pass on? How much will they might say, you know what, we're going to try to absorb? That's another thing is that could be some companies, if they don't have pricing power, may have to eat the tariffs. And so it's a tricky thing. As you mentioned, Amazon's ramping up its same day grocery delivery. So that's something that is a potential threat to Walmart, which is the world, is it not the world's, it's the US largest grocer in the US. Yeah, I know. So it's a definitely an important element there. Walmart may have to step its game. I mean, Walmart does have a pretty good e-commerce operation. So yeah, a lot going on. And it's important it's really important for everybody else, like to get a read about the economy, to get a read about what businesses are doing. And so I think it's a lot more important for maybe the market and for investors rather even just beyond Walmart.
Yeah, and they seem to be holding the line with prices in terms of tariffs, at least on some consumer staples. So we'll see how those comments shape up there. And of course, it looks like they are also trying to implement AI agents across some of their customer service and e-commerce platforms there. So, any other thoughts as Walmart tries to improve those margins?
Yeah, I mean, it's just like there's just a lot of things going on. The economy's slowing. Maybe the tariffs are in there. How can they do things? They might have an advantage to demand from their suppliers to get some, whether it's in the U.S. or elsewhere, to push those down. It's just that how they handle it will give a guide point to that, and just want to see how they can handle.
All right, Ed. Well, let's take a look at the chart action here because we saw Walmart run up to this high of 105.30 back in February, and then those tariffs hit. It's recovered, but seems like it's been range bound over the last few months. We saw it break out of this flat base here, but it's testing that buy point. So, what are your thoughts here with the technical action?
Yeah, and one thing is that when it was making the big run up, the relative strength line was really strong. I mean, that was an impressive run up. No, no, even more. The more the run from last year up till January, up until the tariffs, RS line was really doing well. Now it's been slumping. Now that's probably because the market has been running up. I mean, it tried to improve a little bit, but it's still definitely below where it was a few months ago. So one case, yeah, it's pulled back to the buy point, partly on the Amazon news. I mean, ideally, it would just sort of hang around here and you could buy it off of that, or maybe if it cleared the top of that, which you could treat it either a high handle to that base or treat it as a handle to this broader consolidation going back to January. Either one could work. Now, again, this is probably not, I mean, it has gone on some decent runs. It did last year. That was a pretty good sized run it went on from like last May to January. That was a good run. Uh, that's not very common anymore, but it can still deliver a solid performance, maybe something a little different. So when all the AI stocks are down 4 or 5%, this one might just shrug it off. So it's something to consider for your portfolio.
And just switching over to the weekly, Ed, we talked about some slowing growth, but anything standing out to you fundamentals wise?
Yeah, that's the thing. We're seeing some slowing growth, and can that pick up? It's supposed to pick up a little bit this quarter, and can they sustain that? I mean, it's a difficult environment. I mean, they may get some more customers trading down, but a slowing economy and some artificial cost pressures push up is difficult. They don't have amazing margins, so it's not like they have that much to give. One of the things is the up down volume ratio is 0.9. So that's not the greatest ratio. You like to see it over one, as a short-term measure of demand for the stock. But yeah, that it's doing okay. It's it'd be great if it could return to double-digit growth. I'm not sure if it can do that on a consistent basis in the short run.
All right, well, let's move on and take a look at Viking Holdings, which is scheduled to report Q2 earnings on Tuesday, August 19th. Earnings for the cruise operator are expected to jump 168% to 99 cents per share, and revenue is projected to sail to a 16% gain with sales of $1.84 billion. And here's why we're watching Viking Holdings. We'll be paying attention to commentary on booking and pricing there, Ed. And Viking's newest ship, Mira, is one step closer to making its debut next year. The company recently announced the float out of that ship on July 31st. That means the construction is now taking place in water. I got to learn all about ship construction last night, Ed. And, it is a signal that the company really focused on expansion and that luxury market. So, what are your thoughts with Viking and what can those earnings tell us?
I mean, in the near future, there's a lot of this growth market. Viking tends to appeal to well-off, older cruise ships. Like this is where this is not for the big gigantic carnival ships, just a festival of drinking and little kids. It's a little more leisurely, but it's also, nice margin on there. This has done very well since it came public a couple of years ago in terms of, earnings are really booming right now as it really it comes out, it's really had some, obviously, during the pandemic and certainly after that, tough times for the cruise line industry. But people want to travel, and this is still doing quite well. This is a lot of river cruises. They don't do just that, but yeah, a lot of strength. Eventually, they'll face some competition, but not for a couple more years, and they probably won't say a whole lot about that. That's it, but a lot to like about this name.
And we're on the daily chart here, Ed, and it broke out of this cup with handle base here on June 6th. That's a 48.58 buy point. It's in that profit taking zone if you bought at that point. But again, what are your thoughts on the technical action here? This has had a really nice run. It looks like it found support at the 21-day line just over the last week. So if you're in this, how are you handling it? And if you're looking to get in it, how do you want to see it set up?
Yeah, it's acting very well. It's acting better than most travel stocks. I mean, some of them took off this past week, but this one really was already out there. Yeah, you certainly could take some profits. It sort of depends on how can, it depends a lot on your style, how much of a conviction you have in that, how concentrated. If you have a portfolio that's 80% in Viking holding, you might be more eager to take some profit. This can move pretty significantly around earnings. So it's not like it can be more like a rapids when it comes to earnings than it's not just a cruise ship. So it's just something to know. But definitely have enough cushion if you bought it, at a decent spot. So you could definitely hold it through earnings. There's not a whole lot to do here if it gradually pulled back to the 50-day line or even maybe to the 21-day line after earnings. There might be something. Otherwise, it would need a new base. And but the relative strength line's at a new high. So doing very well, and it's definitely outperforming in its industry.
And just highlighting here that monster growth that you're talking about does appear to slow down next year, but really great numbers here from Viking Holdings.
Yeah, obviously it's going to slow down at some point. The numbers are going to get higher, but really strong performance here.
All right, well, let's move on to Amer Sports, which is scheduled to report on Tuesday, August 19th. The sport and outdoor brand is expected to see Q2 earnings fall 60% to 2 cents per share, and revenue is expected to rise 18% to $1.18 billion. And here's why we're watching Amer Sports. We're going to want to see if the company is still seeing pricing power and strong demand for their key brands as it passes on tariffs. So Ed, again, looking at another retailer here, as a sign of the strength of the economy right now. Uh, Analysts have noted that the company's key brands, that's Arc'teryx and Salomon, they've maintained a robust sales momentum, but tariffs could cast a shadow over that growth story. So, what are your thoughts here with Amer Sports? It seems like, they have some manufacturing exposure in China and Vietnam that could be impacted by those tariffs.
Yeah, I mean, they also own the Wilson brands, like some tennis rackets and some other things out there. So they have a lot of outdoor gear, outdoor wear, and some sporting goods. So yeah, I mean, they were very bullish on the last earnings call. They had really strong numbers. The revenue growth stayed very high. And so they were just like, yeah, we've got pricing power. I mean, and so we'll see if that continues. At some point, people might say, well, I don't know if I need another one of those outfits. I mean, I don't know. And so that always becomes an issue. The tariffs are seem somewhat set on China and especially Vietnam. Now, it's not nothing's etched in stone, but it's not radically different and maybe better than what they had been expecting before. I don't know, so that's the real trick because there are tariffs and it's just can you pass them on? And we saw that with another company this week with Tapestry, which luxury brands or at least affordable luxury. So this is not and they warned on the coming year because of tariffs. So they obviously don't think that they can pass all the costs on to consumers. So that is something. It may look strong, it may look like everything's good, and then it won't. So really important to see not just the numbers but their outlook. Okay, now we know what it is. How do you see that happening? Could see a big move on earnings, I think.
And always a key point, as you always mention, Ed, to keep an eye on related earnings. Those could give signals as to what may happen here. But we're on the daily chart here. Amer Sports is in that flat base with a 40.21 buy point. It reversed off the 50-day line yesterday. Some nice action there, but looks like it's testing that moving average currently. So, what are your thoughts here on the chart?
Yeah, I mean, the volume dried up for the most part in this, especially the last few weeks. I mean, it's really ever since earning gap up, it's basically gone sideways since the last earnings report. I mean, their base might be a little bit later, but the whole area is basically the range we're looking at. So it's nice that it held up. But the thing is, it looked like it was going to move out a number of times, and it just hasn't. And now, which is okay. But now if you bought on the earnings gap up or on one of these little things where it looked like it was going to move, you don't really have a cushion. And so that's just something we generally say at least 5%, maybe 10% more. Definitely could see a 15%, 20% drop if the outlook is weak and they say, of course it could break out. So aside from an options play, I think newer investors, really have a decision to make. Those who already owned it maybe when it broke out ahead of the prior quarter's earnings or maybe a longer term holder, they have a bit more cushion to hold it. But for people who bought in the last couple of months, they are somewhat exposed to the downside for sure.
And how are you approaching this? Say earnings come and it's good news and the stock is moving. Are you looking at that first opening 5 minutes, or what would guide your decision there in terms of perhaps this being actionable after earnings?
Well, I'd wanted to get it above these short-term highs at least. Obviously, it wouldn't be that far from the 40.21, that'd be fine. And it could gap up. It could do all those things. If it got above those levels, it could be actionable, but not the first 5 minutes. We've seen it's always dangerous to buy in those first few minutes, but especially the last couple of weeks, it just feels like we've seen a lot of stocks that gap up and either give up the gains or slash the gains. And it's the other way around too. We've seen some stocks that have come down 15% or so at the open, and then the end of the day, they're up. But it just feels like there's a lot of that going on. So I probably want to wait at least, say, 15 minutes. Some people it's like wait 30 minutes or an hour before making a decision. Sometimes you miss out. Sometimes the stock runs, and you don't have another opportunity. But generally, I think that's a safer course.
All right, Ed. Well, those were some of the big names on our radar, but there's always a few more to get to. So let's take a look at a cybersecurity play. That's Palo Alto Networks, set to report on August 18th. Talk to me about this chart here.
Stock looked like it was breaking out, and then it sold off in part because the rumors, which were then confirmed, that it's going to buy CyberArk, a rival. So to some extent, this is about that buy. It's not because the business is terrible, but really this was damaged. But we want to see other names because cybersecurity and other software names have struggled in the past couple of weeks. So a positive report would be really nice to see for some other name and including some things. So really be positive, but I don't see this being actionable. It looks too messy and needs to repair itself.
How about Fabrinet? The electrical component manufacturer is also due on August 18th. This one had a nice breakout here, but looks like it's testing that 21-day line.
Yeah, and so it just depends on where you bought it and how much cushion you wanted because this could sell. We saw some other names that are sort of in these spaces. A lot of AI hardware or AI adjacent names have come under pressure this week. So heading into earnings, if it could hold the 21-day line, it'd be really encouraging. But yeah, definitely could see a move down. So just know what your cushion is.
All right, let's look at Futu Holdings. That's a Chinese online brokerage platform. Earnings there due on August 20th. So thoughts here, Ed, we've seen China stocks kind of make moves. There's always the caveat that there's some volatility in here. But what are your thoughts here with the technical action?
Yeah, I don't see where you buy this. I mean, there's looked at a lot of blue skyscrapers, the volume very strong on that side. It offered some entries along the way, I don't know, 114, 118, maybe 122 or so, just various places. But since then, not really. And I don't know where. I mean, I guess you could have done it off the 21-day line. Pretty steep. Obviously it's working, but I think at this point it would need to settle down for a while and find support somewhere, but acting very well.
All right. Well, we talked about Walmart, but there's a lot of retailers reporting next week. Let's just take a peek at Home Depot. Those results are expected on August 19th. Thoughts here, Ed? I mean, this one's in consolidation, but obviously not doing as well as Walmart. But what are you hoping to learn from Home Depot results?
Yeah, are we seeing any signs with mortgage rates coming down, like home improvement projects or just, something housing related? You can see that it's rallied along with a lot of housing stocks in recent days. So maybe when it went above the 200-day line, it was sort of becoming actionable, like decisively clearing that. Now at this point, here or further up, maybe form a handle because it's sort of run up a ways. It's sort of in no man's land. But yeah, definitely want to hear about what they have to say about the housing and related markets.
All right, let's look at TJX, another retailer here. Those earnings due on August 20th. This one also in a cup base with a 135.85 buy point.
Yeah, when it decisively moved up of the 50-day line, when it decisively moved above the 50-day line, it was actionable. It sort of got above the old buy point from a prior base. I mean, not that just so, fewer people were upset. Let's put it that way. And so that's always nice because then when it clears away, so that was a nice entry. Now it's a sort of maybe it could form a handle, but this has done well. This has done reasonably well. Yeah, the relative strength line, not so much lately. But again, along with Walmart, how are they handling this discount, area? Maybe people trading down. The earnings weren't great the last quarter, but and again, it's sort of like Walmart. It can have modest growth, but in a sort of uncertain economy, those kind of discount retailers often do quite well.
Let's take a look at another discount retailer with ROST stores, earnings scheduled there for August 21st. This chart not looking as good as TJX, Ed, but still in consolidation here. And it, again, looks like kind of in that no man's land.
Yeah, it'd be nice to see this maybe come up a little bit further, get above some of this area or right up to it, and then form a new base or at least a long handle kind of thing, because it's gone up and down. And if it does get up to 150, it'll have run up a lot, but still not all the way there. It just like to tighten up. It just like to tighten up a little bit before it becomes actionable.
All right, let's take a look at Burlington stores, see if they're doing any better. Earnings scheduled there on August 21st. So thoughts here, Ed?
Yeah, that one is acting pretty well. I mean, that one has a handle. I mean, this it's so that 288 or that's a legit buy point. There's been a bit of a shakeout. It's been a little messy in that handle, but that's all right. If it gets above that, that would be something. And the growth for this name is a little stronger than TJX and Ross.
All right, well, let's take a look then at Dollar Tree. We'll end there. Another discount retailer. This one looks like it's testing the 21-day line, but a pretty nice run since this breakout back here in April, Ed.
Yeah, so people who own it, I think you can hold it, but other than that, I think you need to wait for maybe a test of the 50-day line or a new base. That's a pretty good size run for a company that isn't growing that great, so probably could use a break.
All right, Ed, well, thank you as always for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today. That goes live after the closing bell. Thank you so much for watching, and we'll see you all next week.